Good morning, traders and investors. Welcome back to Pre-Market Prep. Who's ready to continue this week? Let's take a look at what we got today. Turnaround Tuesday, we're calling it. We'll take a look at the meme stocks at it again. Best Buy, Baidu, Big Lots, earnings. We'll take a look at First Solar announcing a $1.2 billion new solar panel manufacturing facility in the U.S. We'll take a look at Kathy Wood-led ARK Invest taking a position in CDNA. The outlook today that we got, of course, on that comes from the revenue expectations. That's what Kathy saw. We'll take a look at uranium stocks, Lucid, Netflix, Jolt's job opening coming at 10 a.m. We got our special guest, Jay Woods, Chief Market Strategist at DriveWealth and New York Stock Exchange Executive Floor Governor. Let's dive into pre-market prep and get it started. Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day. All right, how we doing, Joel? How we doing?
We're doing well, man. Up 27 and a quarter handles, 40, 58, 50. We talked about going green for the week yesterday morning. That's 59.50. That's the battleground right here. Yeah, we've been up to 72.75, but haven't proved to me you can hold that close from Friday. Crude up again, down 283, 94.18. Gold slipping closer to 1,700, down 610 at 1743.60. Silver down a dime, 1857. Bitcoin clinging to support, up 340 at 20,305. And Ethereum futures, they're up 56.50 at 1571.50. All right, let's bring on Triple D. And Triple D, I want some non-investment advice.
What do you got? What do you need?
Okay. So yesterday, Mitch and you was asking me, what's a catalyst? What's the bull, what's the bull thesis down here? Yeah. And you can talk technicals and 50% and support and resistance, but we know that really doesn't matter in the whole scheme of things, right? The fundamentals, interest rates. What if there's a positive catalyst out there that no one's really paying attention to?
What is it?
China.
Why is China going to be positive?
Because they need to pick up their economy. They're in a position.
Do they really need to?
They do. Yep.
And I don't think they care about their economy, but
yeah, that's what I would think too. I don't think they care necessarily if they have to put their people in.
Okay, let's let them go though. Let's let them go.
Yeah, go ahead, Joel.
Okay, so what if they're in a position now where they can have, they could do some pumping, money into the economy like we did, and you haven't had it in a long time, but you get a sustained rally in China. I mean, is that bad for the U.S. markets, or is that good for the U.S. markets?
Well, I mean, you are seeing a rally in China just because they were potentially going to open up the books, so we saw that last week. That rally obviously got faded once again. Is there an opportunity to buy the dip on some of the China names? They're all dirt cheap. From a valuation perspective, China has always run cheaper than the U.S., but it's just, been the value trap for so long, and we've talked about this before. You throw up the FXI on a long-term chart or even the EEM, we've gone nowhere. I mean, the FXI was at $30 in 2016. It's at $30 in 2022, where our markets have tripled in that time. Their markets have gone nowhere. So there's always been the thoughts, and I've thought it too, is there a catch-up trade here eventually to own China? I keep thinking there is, but then, it just never happens. You get a little bit of life, you get a 10% rally, and then it's met with more sellers, and at the end of the day, it just goes nowhere. So I don't think they care about their economy as much as, a capitalist society like the U.S. does. So it's just a different way that they run things over there. I still think they're going to invade Taiwan. So I think it's the negative catalyst. I mean, obviously that hasn't occurred yet. That's a good thing. I think it's still on the table. I don't think it's off the table. I think if they do invade Taiwan, I think the markets would just get harpooned. We'd be down 2,000 Dow points very quickly. But, I've talked about that for a bit, and that hasn't materialized, so that's the good news. The bad news is we've sold off for other reasons. So, I mean, you pick your poison. You want to talk China, you want to give it a positive catalyst, that's fine, but we can keep
potentially.
looking,
I said potentially. I mean, I have no exposure, to
Yeah.
it, very or very little. So I don't know. Everyone was looking at it as like, the China rug pull, and we got the Jerome Powell, rug pull. So I'm just, I'm trying to look at things like I said. You can
I like your
count the
optimism.
technicals.
Trying to look at the bull case a little bit more
We like
and
your
see what
optimism.
could be
Me and
there.
Money Mitch like the optimism.
The biggest
We're just
thing
not on
though
that
to me
side.
though is trying to weigh out things, right? And so that's why I'm more on the bear camp, because when I weigh out things, like you just kind of mentioned, it feels to me like it was a little bit more fishing for the bullish catalyst than it just being present. Like the
Yes.
headwinds that we have on the other side, it's as clear as day.
Yes.
I mean, you know exactly what you're facing. And that's why I'm more in the bear camp, because I feel like I know exactly what I'm facing, which is, of course, the interest rates being raised, fighting inflation being the focus, and of course, looking to see what happens in oil, because if that goes rampant again, well, clearly we're going to have to keep fighting inflation.
And clearly here, Mitch, we've laid this out, all last week. We've laid this out, why I raised cash back up to 50% my long-term portfolio. I mean, the reasons are obvious. I mean, you've got the rate environment. Inflation may have peaked, but Powell has said it's not good enough. I mean, the TINA trade is dead. You can get good rates, alternatives to stocks. People want to keep doing these comparisons to 2016 or to 2012. There's no comparison because we're running in a different environment here right now. So we're running really high. I mean, inflation's really high, and there's a hell of a lot of risk out there. And I think eventually it does show up in demand destruction from what the Fed is doing. I think they have to, and I think eventually it shows up in the earnings. The only thing that we had going for us was they had crappy earnings last quarter, and they were buying them on crappy earnings. They need to keep doing that in order for this market to really, continue to go higher. Because one, the market, to Cameron Dawson's point, who's made it multiple times on our show on CNBC, we are not cheap historically here. We're trading 19, 20 times forward earnings. And a lot of those earnings, we're at top of the cycle. I mean, the chips, like you think about, the cyclicals. These earnings weren't even like they were in the trough. They were top cycle earnings. So when you come out of this, it's like that E might start going down, and then that P starts going up. And if you get multiple contraction a little bit here, that equals a hell of a lot more downside. So I'm sticking with my thesis that the ARKK 2022 low is in, because those stocks were really beat up. But I mean, we're come off hard here now. I did buy a few stocks yesterday, so I was 50% cash when we were up at 420. I was like, you know what? I'll nibble into a few stocks. So I bought 3 stocks yesterday in the long-term account. I wanted to get my take 2 full position back. I'd sold that higher, got that back. I'd sold EA a long time ago at like 140, like a year ago. I wanted to re-get that. And because when you were away, Joel, there was a rumor that Amazon was going to buy EA and it popped up on it. I don't think that's going to happen, but it came right back down to where it was prior to that rumor. And EA's non-expensive stock. And then I took a half-size position down and dirty in Intel because it's a dog of dogs. I know. And everybody laughs. And you know what? I'm early usually. I take heat on these. Everybody made fun of me for Disney for a long time.
They did.
I took a lot of heat. Disney was 95 and I bought more on, under $100. There was multiple people in the chat saying I'm an idiot and it's going to 60. You know what? I ended up being right. So, it's come off here now a little bit again, but I think it's way oversold, Intel. I think there's an opportunity there with this CHIPS Act that it could be a catalyst here too. And I don't mind, I'm a momentum trader to a certain extent, but I'm a contrarian investor. And I buy when it's in the gutter. So, we've come off significantly, and maybe Intel's just going to zero, and we're not going to ever use an Intel chip again. I don't think that's the case. That's why I just nibbled into an Intel.
I started out with a full size position in Intel. Now I have a half size position.
Oh, you're still in that. I got lucky to get out of that because I was in it for the Mobileye around 50, and then I had that they had that rally, and actually I took heat on it and went down to 43, 44, and then in the March rally, it rallied back up over 50 again. I was like, this trend's just ugly, and I just felt like it wanted to go lower. So I sold out of my Intel, and then obviously and I've said that. You guys knew I was out of Intel. 45, 40, 35. I've kind of been wanting to rebuy it, and I just look here and I'm like, man, this might be the value trap of value traps, but we're back to 2016 levels. Everybody is counting them out, like down for the count. We've knocked them out. Muhammad Ali, boom, AMD has taken them out. Nvidia's taken them out. I think that there's still some life there, and that's why, it's a trough valuation. So you can see the kind of the companies that I was picking on a little bit. I do believe, I hate the metaverse, but I think the gamers are going to eventually have, the best chance in the metaverse. So that's why those stocks too. So I took a couple of flyers. Not any. I've raised my cash went from 50% I think to 44. So I put about 6% of my cash to work.
I feel like, if you're betting on Intel, you're betting that eventually they get the innovation they need to come back to battling AMD back. But I think at the present moment, I don't think they have anything to battle back on AMD, but they need to innovate. And they do have the possibility. I mean, they have the money, but really their performance increase in the last, I would say 5 to 6 years from chip to chip has just been really lacking. And so
isn't the Mobileye worth what they're trading at right now?
Well, it's not. It was when we were going into the crazy EV valuations, and that was the argument to buy Intel a year and a half ago at 50. That Mobileye was worth a pretty good chunk if they spun that off.
Yeah.
But now that EV valuations have just plummeted, that Mobileye valuation has plummeted too. So I mean, so it's not worth nearly as much. But that's a wild card. I mean, a Mobileye spinoff would be nice. I don't know if they're going to spin it off. They obviously brought it into the company, but there was talk of that last year. I mean, that's a wild card for the stock, but it's not worth nearly as much as it was a year and a half ago. So I think it's just a matter. This stock's went from $65 to $30. It's been cut in half in last year. I'm making a bet that Intel isn't done, and I took only a half size position. So again, when I bought Disney originally, I took a half size position and then I added to an attitude. Sometimes when you're buying in these contrarian, it's not bad, the Jim Cramer way, where you buy a piece, then it comes in more, you buy a little bit more, and then you buy a little bit more. And eventually I got to my Disney as a double sized position because I'd averaged it down so much, doing exactly opposite what you really should do as a trader. But, I was a long-term investor and I was believing the story, and it actually bailed me out, because I brought my cost base.
That's a good call on
my originally Disney purchase was, I think, 132.
I know.
And then I bought more at 120. And I bought more at like 110. I think eventually I bought it under 100. And I brought the cost basis down, which not that you should do that. I preach not to do that, but I just believe
it's
in the
different
story
long
still.
term. Yeah.
It's not really. You really shouldn't do it long term either. In breaking the rules, I've been hurt doing this too. So breaking the rules can hurt you. But I just think Intel's not out. I think everybody's counted them out, and I think they're not out.
Yeah, I can agree with that. I don't think they're out. They're just not the favorite.
They're pricing like they're out, though. I mean, what's the PE on Intel?
Yeah,
it's under 10.
It's got probably under 5.
It's not that low because the earnings have come in a little bit. When they were at peak earnings, Joel, you're probably not far off.
I have 13 right now.
Yeah, you're way under a market multiple of 20. So, and then you got AMD and Nvidia trading the opposite. Like Nvidia's trading like 40 times. So, it's basically saying that Nvidia's, 3 times the company that Intel is. On a trailing basis, Intel's 7. Now, on a forward basis, those earnings are projected to come in. So you can't just be looking, at that. So P is like 7 on a trailing basis. So I don't know. That's what I did yesterday. So I did a little bit of nibbling. Whether it works out or not, time will tell. These aren't trades; these are longer-term investments. So, and I'm usually early on these damn things.
It just seems to me like they switched hands. I mean, you look at AMD now. It used to be $20. It used to be in that range, and now you're seeing, Intel in that range, and AMD flipped at the 90s
for sure.
Where it used to be like the opposite way. AMD was down, and Intel was down. So your bet was probably on AMD. So I have no problem with your bet on there, Dennis. I think long term, especially if you have a horizon out in a couple of years, Intel manufacturing here in the US, it could get the lift.
That's the wild card too. Like if we start doing the chips, if the CHIPS Act, it's giving them $60 billion a go, Intel be a big part of that. I mean, we got to start getting less dependent on China. This is what really needs to happen, for the U.S. to prosper. For North America, I speak as a Canadian too, but Canada and the U.S. are combined. I mean, we have our economies are combined. For the U.S. and for North America to prosper, we need to get away from their dependence on China. But that's going to be painful because we're addicted to cheap labor. And, if manufacturing starts happening over here, they're not going to work for $2 an hour over here. So, that's the one thing. So we might actually have to see more inflation in the short term to get away from that dependence on China. But I think it has to happen because this is not, you're seeing what we talked about briefly last week is deglobalization to a certain extent, where everything was becoming a global economy. And now the world is becoming separated, politically at least, and obviously, through other things. You're seeing a little bit of deglobalization. If that continues, it's going to be a painful process for the U.S. equity markets.
All right, let's go towards the meme stocks on the move again. Triple BY on the move, and you got to keep these on your radar. I talked about these on live trading yesterday that it could get the lift because a lot of people are expecting that kind of restructuring of what their plan is for their business. It did get some lift yesterday. It's up again today in pre-market. How do you feel about this play now?
This just memester stock is, in its own little, you got the GameStop and AMC that are doing their own thing. Now Bed Bath & Beyond is the new, choice in 2022. So they're going to rip this thing higher. They're going to do all the fun things. I said the wild card when it was like $8 or $10. It was like, imagine if Cohen rebought in, Joel, that would be a wild card. If all of a sudden a filing hit that Cohen bought back in, this thing would be up like, they would go nuts. Yeah. I don't think that's gonna. I think he's maybe spooked, that maybe he's getting looked at, maybe he's not going to do that, but it's not impossible. I mean, he just sold it all 20, 25, 28, 29. You could buy back in. I don't think he really cares, to be honest, about the regulators. So, I mean, if a filing came that he bought back in, this thing would really rip higher. So that was a wild card. I've played it long the last few days, just playing around with it. Biased to the long side. I didn't have it overnight, but I had it overnight yesterday, and it was good.
I see you, Dennis. I see you.
I'm playing it a little bit. Just it got down to $8, $9, $10, and it's felt like, wow, it's given it all back. And the 5 support's huge right now. That's a ways down. Now at 15, I think it's gone again. But when it got under 10, it was probably just too oversold. It went from huge overbought in 3 days. 3 days later, it's oversold.
All right, let's keep going. Let's get into some of the earnings stocks. Let's go to Best Buy here. EPS at $1.54 beats the $1.27 estimate. Sales at $10.33 billion, beating the $10.24 billion estimate. Comparable sales down less than expected, and getting a little bit of a bounce here with the market that we're having this morning. Do you feel this is a rip to fade, or how do you guys feel on Best Buy?
It reported on the right day. I mean, you got a day that like it's funny, these earnings reports. A lot of times it just depends on the day they're reporting. I mean, we're turnaround Tuesday. They're buying stock. They're biased. It was a decent report too. So maybe it was going to rally no matter what, but it helps that it reported on the right day too. The problem is this thing's got a huge overhead supply. It's been in the gutter for a while. Its valuation is cheap. I mean, you want cheap stock too. Best Buy is a cheap stock too. And I've thought about, under 70, that maybe this one should go in the long-term portfolio. But then you just think, if you're going in a recession, I mean, it's not a recession-proof stock by any means.
Yeah. Nice pop, 77.50, no man's land to me. I think what I would, if I was a bull, if I was lying this thing, I'd be saying, man, can we get to Friday's high? Can we get to 78.58? Thursday's close is right in that area too. But if not, I mean, you got a lot of people stuck from Friday. You had people just, hey, I'm gonna take a flyer on the earnings, and the earnings are decent. So
Yeah.
keep an eye on 70. I mean, we're $1.30 away. We could go there, but I don't think I would be impressed with the price action in this today, unless you closed in the 78 handle. 78.19 was your close on Thursday, and then Friday's high was 78.58. So it's good. It's not great, but let's see if they could come in and they get it above 78. On the downside, the top of yesterday's range, way down there, it's 74.52. Maybe if you are trying to short this today, maybe get out there at 74.60 or 74.70, and you get a big seller off the open that may whoosh it down there. But that's what I'm looking at in Best Buy.
I'm
Haven't been there in a
still
while.
of the firm belief that last quarter's earnings don't reflect any of the Fed action, because people were still spending, because the interest rates really hadn't gone up much at all. If we just go back to the previous quarter, it's going to be this next quarter that earnings are going to get smacked around, that you will see consumer demand starting to go down.
And yet, my biggest concern also in leading towards that is what happens in the holiday season. Will the credit cards be too racked up to add some of those
people
gifts?
buy.
People find ways to
they're
buy.
Gonna buy. They're gonna buy.
Well,
Oh yeah.
But we don't. The next
they may not have
quarter,
the money, but they're gonna buy.
but next quarter is not the holiday season for them. So, and that's a consideration too, is this next quarter is the one that I'm worried about. So let's get into the next quarter earnings. Like, obviously we get through August, and then, you start to get into September, and then we start to look, we're out of earnings season really here for the next 6 weeks. So once we start to get back into it, I mean, that's going to be interesting, because I think the next quarter's earnings for a lot of companies, it's not going to be great.
And another thing too, just to emphasize that point that you just made, and I know we're 2 years removed now, from the outbreak of the pandemic, but right, the first second quarter in 2021, I mean, they're nothing, right? Terrible, nothing was going on. 21, yeah, everything looked great, right, compared to 20, and now I still think you're looking at a normalization period. I think the disruption to the economy from that event, I mean, it's gonna take a long time, to make any kind of comparisons from the last of any kind of substance, because of the shock. So I agree with you. They gave them a pass on the second quarter. Will they do in the third quarter? Then of course you got your quad witch coming up in September here. So I agree with you. It's they gave them a pass. They a lot of passes on the Q2, and let's see if they're nice enough.
Because people want to they still have the 2021 mentality that I just buy the dip, eventually I'll make money. You know what? I can hold on for 6 months or a year. It'll be okay. And maybe that's going to be the case, Joel. Maybe we're getting back to all-time highs in 6 months. Like, obviously we've had multiple guests come on our show saying the same thing. Tom Lee's on CNBC preaching, about a new all-time highs by the end of the year. We've had a lot of smart people on this show coming on saying we're going to hit new all-time highs. I don't see the recipe to get there. I cannot see it. I mean, unless the market just completely disconnects again, which it can. I mean, in Bed Bath & Beyond, it's connected, and the FOMO just takes over, and everybody just goes crazy. But it's just like you're pinching the consumer as you continue to raise rates. Powell has said he's going to pinch harder if necessary. And we're just expecting earnings to just stay strong, and companies to just stay strong, and the economy to just stay strong. And we're going to get a soft landing through all this. It just doesn't add up to me. We've never fought an inflation bug like this in 40 years. So I don't know how you break it.
We'll see what starts
at all-time high.
We'll see what starts happening in September also with a quantitative tightening coming into play. You're seeing more and more mentions of that. Let's keep going to Baidu now. So I have to ask Joel if he's thinking about the China trade. What does he think about Baidu? But let's give the numbers here. Baidu EPS at $2.36, beating the $1.63 estimate. Sales at $4.42 billion, missing the $4.45 billion. It's up today, and PDD held well yesterday. What do you think, Joel?
I think this is probably the easiest technical call of the century.
I like easy technical calls. What do you got for me?
What you got? I mean, you got room to 157. And I'm not talking about today or long term or a breakout, but look, I mean, this is technical. I don't know what's going on with China politics, and they can come out, but look at this monthly here. Look at this. I mean, here you are. This is the third time that you've come up to this 157 area on a monthly, not just on a daily, not on a weekly, but a monthly. So that's that's still $5 away from here. It's resistance until it's taken out. But I just look at that 56.77, 56.69, and then this month's high so far has been 55.48. I mean, that's the level. Things really open up to the upside on Baidu. No position, and I don't know. I'm just saying 150. Mark that down as a 5-star number.
The wild card is just headlines about the books, headlines. There's a lot of wild cards coming out of China right now. They're all moving together. I mean, you can just group them all. Baba, Baidu, Pinduoduo. Yes, they know Pinduoduo had earnings, so it went a little bit higher. But I mean, they're all just moving together here. So I'm not sure. I just at the risk here. It's all about that's all I assess. That's all we are really as traders, as risk managers. And there's headline risk all over the place. It could be to the upside, it could be to the downside. I'm just, if I'm trading China stocks, I'm hedging them, hedging them with another China stock, because I just cannot just make a call that they're cheap, let's go. And I can't make the call that they're going to be an invasion, eventually they're going to go down. They open up the books and those things pop 10%. So there's too much unknowns from
Triple
the
D.
next headline.
I can't
headline
believe it.
Risk.
All the years I've been doing the show, I've never done this before. Look at the Baidu chart. Can you see what's above that 156.78? Can you see
25-star support?
Yeah. No, resistance.
Resistance. Yeah.
I've never done that before. In all these
that's
years.
a good level to watch.
That is, and Dennis knows about those stars. That's a 3. That's a 6.
Joel
That's
on a star
9.
system.
There it is. All right.
When we first started at Bright Trading in the Southfield, Michigan office, and man was starting to roll over. You can tell I'm starting to get a little distracted because there is a lot of this market just gave back.
Turnaround Tuesday. What do you expect?
Turnaround Tuesday. Turning around for the Bears.
It's turning.
It was too much overnight
on
nothing. On Best Buy's leaking too. It was too much overnight on nothing. But anyways.
Well, what the catalyst for the driver was today before we went on the tangent there. The driver for today was oil getting hit.
Yeah, that's exactly
because
what
we've been worried about inflation and commodity prices, and oil. All of a sudden, oil rolled over here a little bit today. I think that was a real kickstart for the equity markets. The negative correlation is back between stocks and oil prices. You can clearly see in the last couple of weeks that the negative correlation is clearly back. Oil down, U.S. equity markets are up, and that's just people scared that of the inflation bug. And if commodity prices continue to go high, they're like, well, that's Powell's green light to raise more, to continue to raise and get more hawkish. So the clear correlation is there. I'm a relationship-based trader. I see oil start rolling over, I want to buy stocks. I see oil start rallying, I want to sell stocks.
I think that's another thing that Joel has up there with the dollar too. Have you seen the dollar up?
Yeah, look at that 30. Look at that, Dennis. Look at that dollar. $30. I'm just on the UUP. I know everyone.
And that's again related to the markets too. There's a complete inverse correlation between U.S. equity markets and the U.S. dollar because it's flight to safety. As the U.S. equities start to sell off, they fly into U.S. dollars. It's just the natural move over. We're buying U.S. dollars. We're moving out of stocks. We're buying U.S. dollars. We're moving out of U.S. dollars. We're buying stocks. So that negative correlation has always existed.
Did you see the euro when I was gone got under par? Did you see that thing?
And I expect it to come right back to it. I expect to see that continue as you're seeing more issues come out of Europe and, of course, more concerns for recession. And I think it's almost a guaranteed now in Europe. There's one thing battling here in the U.S., but in Europe, things are going to get tight here pretty soon. All right, let's go towards Big Lots. Let's see who's shopping at Big Lots. They came in at a loss of $2.28, beating the loss of $2.47. Sounds so great. But estimate sales at $1.35 billion, beating the $1.34 billion estimate. Big Lots.
They've just I keep saying they've classed up those stores too much. They've, it used to be you'd go into the big lots, you'd look for the good deal. I'd go buy my aspirin because the box fell off the pallet and the box is half crushed and I get like 50% off. I like the deals. You go in there,
falling off the
there's no
truck
deals
deals.
like that.
I know those
They
deals.
totally lost their way. And again, and this is why this stock topped back in 2018. They lost their way. They were a discount retailer that is all of a sudden trying to move up a class. Stay in the, we want the deal. Go in there. I don't want to see, like the nicer stuff in the big lots. I want to go in there and I want to get a deal. Know who you are. They've lost who they are. This is why I've not liked the stock for a long time for those reasons. It's a value trap. It's been a value trap. That being said, there's great support down here at 20. I don't know. It's sold out significantly. I give you the 20 support, but I just don't like the story anymore.
I'll give you a little bit more, something a little bit more relevant. Can we hold 22? I mean, I don't know if Dennis would say here, if you bought this at 23.60, you're doing it wrong, right? 23.75. Now you've come back in, you're 22.19, yesterday's high. Looks like your bid here. I think you'll hold 22. I don't think we'll get to Friday's high, but holding 20, double top at triple top at 23.50. That's where that's where you got to in the after hours. But can big lots hold 22? Can the spoos hold mid range on the session here? We have just been a steady leak. Steady leak. But there's bids there. Can you feel the bids, Dennis? I know
what happens too. A little bit. You're gonna have the bids to scratching because we got back down there near the 400. So you got to buy the dippers that are always prevalent. You can't seem to break those buy the dip mentality. But with that, like what's really happened here this morning is you had a wicked overnight rally on nothing. As we keep getting closer to the open, you have money managers getting to their desk. I swear that's what's happening. People are like, "Oh, I'm getting crushed in this." I'm like, "I'm going to take some profits here. I'm going to get out of cut some losses here." So as more and more money managers see a nothing rally, they're coming in and selling stocks. I mean, they're not at their desk at 6:30 in the morning. The retail guy's sitting there at home. But the big money manager that's going into the office
train.
Still commuting.
They're on the train from Jersey.
Yeah, they don't get there till 9 o'clock. So, I mean, this is what's happened here so far. But, we're oversold. That's why I said I started buying a few stocks yesterday for the simple reason of that we're oversold. We went from overbought to oversold very quickly. So I think, you could bounce, you maybe get the 410, but I think you still are a net seller of rallies. I just think there's more pain ahead here. I like the 50% retracement. We talked about that yesterday, 395 on SPY. Gets down there, maybe you buy a little bit more. I don't think we're, in the situation where, the markets are going to go into an epic collapse here, but we're definitely not out of the woods like we thought. At least
I put the Hexamona on the market when we came on at the top. I said, you haven't proved to me that you can hold Friday's close.
Prove it to Joel.
Prove it to me.
Joel.
That you can hold 59.
Yes.
I can just feel the numbers coming. I tell you, I was a little off my game yesterday. I hope no one had any bad trades, but man, that 10-hour car ride. I mean, I'm just an old guy. I just like 10 hours in the car, listening to books, man. That's a haul. I'm not doing that anymore.
This is why we need autonomous, so you can just kick back, relax, my friend, and let the car do the job for you.
Well, I kind of do that. I put it on cruise control and I drive with my knee, but don't tell Lisa that I do that.
Don't get hit now. Don't hit.
Do that.
All right.
And then you got to go 70 in Ohio.
You don't have to do that.
Because you have to go the speed limit in Ohio. Because if I go 72 and there's a guy from Ohio going 85, they'll pull me over for going Michigan 72.
Ohio is tough, Joel. I never told you my
Ohio
story. I was probably like 10, 12 years ago, and we were driving on that 80-90.
Yeah.
And they're wicked on the 80-90. Anyways, I'm on the 80-90, and I don't know what's speed limit on the 80-90, like
70.
Yeah, well, it dropped. It was in a little spot where it dropped maybe down to 60. Maybe you're going through a busy area. Is there a spot on the 80-90 where it drops down? I don't know. Anyways, maybe years ago there was. Maybe it's not now. But I think it was the 80-90. But I'm like, let's just say it was 70. So cop pulls me over, and he says, do you know how fast you're going? And I go, 80? He goes, 78. I'm like, don't they give you 10 over? I said that to the cop. And he says, he sees the entire place. It's like, not in this country, they don't. I pulled me over for 8 over. 78 to 70. I got pulled over for that. I'm like, I always thought you got 10 over. That's Ohio. 8 over.
That's what happens when you're from Canada, Dennis.
Joel. How fast do you think you're going? I said 80.
All right, I'm going to reel you guys in and bring in some
not.
conversation, bring in some stock talk. Let's go to our guest today. Let's go to Jay Woods, Chief Market Strategist at DriveWealth, New York Stock Exchange Executive Floor Governor. Please talk some stocks to me, Jay.
Hey, well, I could have just jumped in on that conversation too.
You got tickets in Ohio?
No. My 17-year-old just got a nice one for doing 85, and he goes, I was doing the flow of traffic, and I just wanted to smack him in the head and say, listen, you're 17, you drive a red car, so you're a prime target. And he's still giving me grief that he was doing the flow of traffic. But 85 to 65, you get pulled over every time. So
at least first of all, Jay gets the background. Dennis, can I give out an award for the best background?
That's nice background
for an interview.
Well, you got me at work today, guys. So this is where I work
every day, every day for Jay here.
And props to the NYSE team for giving me the nice camera and the good setup. I can actually see you guys when I talk to you, which is cool. And it's great to be with you. I love the conversation. I was listening in, eavesdropping a little bit, so I can't wait to join it.
Well, let's get to it. So the most commonly used term on Wall Street has been a bear market rally. Give us your definition of the bear and what would it change? What kind of rally? What would you need to say, hey, that wasn't a bear market rally. This is a turnaround in the market.
It definitely is the most talked about term over the last 2 months. I like the rally we had. 50% off the lows. That was a hell of a retracement right to the 200-day moving average. And you guys love your technicals, as do I. It was a little faster than I expected. So, there are so many stats now where we're at a coin flip. Well, we retraced 50% off the low. That means the lows are in, and I think they may be. But I don't think we're out of the woods. I still think we're in a bear market. I still think we chop now for a little while. We just got through earnings season. And that's where I saw the shift. We had stocks with bad earnings that didn't sell off. They actually rallied.
Yeah.
You can talk Walmart, Target. Meta is the prime example of a stock that really didn't do too well. But technically, it held a major support level, still dangling at
155. What a level, huh? That 155.
But from a risk reward setup, you've got it's a good trader's market. But we're still in a downtrend. We're still below a lot of the moving averages, but we made progress. So I will continue to be in the bear market rally camp until proven otherwise. But there are a lot of positive signs that we're seeing. Friday was a little kick in the teeth, and we'll talk about that. It may take us a few days to get back above that level. That's a key level I'll be watching. But I'm here on Turnaround Tuesday, so maybe we start today.
And that's possible. The one thing, there's so many things to worry about here, and the market, to your point, really shrugged off a lot last earnings season because the earnings from most of the corporations were not that great. But they were buying the stocks anyways. And that was really the only way we were going to rally because we kind of knew the earnings weren't going to be great. And I think even going into next quarter, I think it's going to even get tougher for some companies here because, you're just adding up the Fed policy, higher interest rates. It's going to eventually hit the consumer. It doesn't show up immediately, but eventually it has to hit the consumer. So what's, and we've had some guests come on the show. Some think we're going to make the lows. Some think we're actually going to make new all-time highs by the end of the year. Where do you sit, end of the year predictions here, Jay? I'll throw you right under the bus. Where do you see us
you're
going
coming at me with a haymaker.
We're coming at you. That's how we do, man.
I appreciate it. No, and listen, I'm a straight shooter as well. I hear a lot of the experts, guys I respect, girls I respect, saying new highs. Don't fight the Fed. Let's stop.
Yeah.
The Fed came out and said, "Don't fight us." That was an 8-minute speech. It was like I was a kid and my dad said, "Don't make me turn this car around." He's like, "Do you realize what we're doing right now?" It was, and if you noticed where he gave the speech, they're in Jackson Hole. He was in a basement somewhere. Where is the bucolic setting? He wanted to set a tone that we're not out of the woods and we've still got some wood to chop. And that goes to where I see we're going to take the market over the next few months. I'm a seasonal guy. August, September, 2 worst months. September, down here, for a trader, it's exciting. It's stressful. And I expect to see a lot of volatility. And I don't think we're going to break the 200-day moving average to the upside in the major indexes in September, at least the first few months. Let's see what happens after Quad Witch. Let's see what happens after the next Fed meeting, September 21st. But to get back to your question, I don't think we're going to make new lows either. We may test them, and that would be fine. It could be one of those tests where intraday it looks like the end of the world. We break it, then we have that reversal where, ooh, now we got a nice little candle. I don't see the catalyst outside of major global concerns that will cause us to take that next leg lower. I think the lows are in for the time being, and we chop. And that chop, to me, as the Fed is getting to a level where we can say, okay, we're getting a little bit closer to where we may hit the pause button. We're not going to reverse course. That whole pivot talk, I never understood. But we're going to pause, and the market can maybe get that, last quarter rally, which in traditionally best quarter of the year. We're starting the best 6 months of the year. Election cycle, we see strength there. So there are a lot of good factors that lead me to believe the last quarter will be good. But given where we are to make new highs, that's a tough call.
Yeah, well, we just talking just one quick thing on the seasonality. I mean, we did bottom on that June expiration, right? That Quad Witch. So what if we could just hang in here to that, I mean, it's still a month away, but you got to look a little farther out. If we can hang in there and make a turn on that Quad Witch in September, then you could have a good end of the year. I'm not in the new all-time high camp either, but let's go to levels here. And you can talk the fundamentals all you want. We can talk technicals. We go back and forth, but as the same as me, you look at like the big boys, the big leadership in the S&P 500 index, and the three stocks that you've identified are Meta. That 155. I mean, that's the line to send a Meta. But give me your levels for Meta, Nvidia, and Microsoft, because you think these could be the stocks that take us on the next leg lower.
Yeah, these are the ones that worry me, and just purely technically, seeing their weight in the index one. I know it's not that 7% Apple kind of weight, and we can talk about that one as well. But these are stocks that didn't really, move the needle from a fundamental earnings point of view, but they reacted well, and now they're pulling back a little bit. Microsoft is the strongest of the three. It actually got back to its 200-day moving average. So I don't see Microsoft as the concern. The level right there, I got to look at my notes, guys, because I positive like that. Yeah, that 105 level, if we pull back, it should hold. The two that have me worried are NVIDIA and Meta. Meta did fall out of the top 10 market cap stocks when it got down to that 154, 155 level. It's tested it a lot. So from a trading point of view, you've got a great setup for risk reward. Reminds me of Biogen, which has been doing the same exact thing for 6 to 12 months now, if you look at BIIB. Right. But for Meta, if it breaks down, you got a long way to go. You got another 20, 30 points. Percentage-wise, that's not good. And if you look at the communication sector, it's the worst sector of them all, the 11 primary sectors. Just because it's the worst right now doesn't mean it can't go any lower. Same thing with energy. Just because it's the best performing sector, the strength is there. It flagged. It's starting to make a nice rally. And then NVIDIA, that was an interesting Thursday, Friday. The earnings were horrible. If you look at the pre-market, if I was on the pre-market show with you guys talking NVIDIA, it looked like it was breaking down. It's the end of the world. And then it caught that bid and it rallied strongly. And then we had Friday. And Friday took out all the leadership and it broke down again. These 50-day moving averages are key to me in the stronger stocks where you have a nice rising 50-day that tested it, and a lot of them tested yesterday. We're going to see a continued rally. I look at Walmart and Target, Netflix. They're starting to come back, and you're seeing higher lows. And so this goes back to the constructive part of what I see in the market. But those three stocks, NVIDIA, Microsoft, and Meta, they're ones where you have that line in the sand, and we keep testing it, and that's what's got me worried. So those are three that I think you need to keep an eye on.
Quick thoughts on Apple. JG wants to know what you thought about Apple holding that 200-day moving average. For me, yeah, I mean, those are nice numbers, but I like to see a couple lows or a couple closes in that area. Comments on Apple testing and holding the 200-day moving average.
Yeah, it would be nice to see it hold and just kind of go sideways and then work its way back up. But this market doesn't do what you hope it does, and the moves can be fast. Apple, you have some outlying events coming up. You have the big event on September 7th with the next. Where are we in the iPhone scale? 14, 15? I'm losing track. But big announcement.
5. I have 5.
You got the 5. Okay. It's probably pretty slow. But hey, listen, technically, Apple didn't make a new high. It made a run at a new high here. So, but relatively speaking, look at that. That's the bellwether.
Monster.
I mean, people answer this question because you want to mumble through it. Is there one stock that's more important than any other? And you're supposed to say, no, I don't have a favorite child. I don't have a favorite stock. But given its makeup, it's the most owned stock in the world. It's over 7% in the S&P 500. It's in the Dow. Yeah, it's important. And I think if you're going to follow one stock, it's critical that we kind of hold and chop around here. And we continue that uptrend, which has been phenomenal, and we try to test recent highs, which is around 170. I can't read your chart from this far. I'm getting old.
Oh, that's okay.
Yeah, it's
because it was NVIDIA. There's Apple.
Yeah. Oh, yeah. You know what? That's exactly what it was. But yeah, that 170 level, I was right. So I'd like to see it slowly move higher, and then maybe the catalyst for the next leg up is that event. Usually events, they rally into them and fade. Walt Piecyk does great work. I don't know if you've ever had Walt Piecyk on your show.
How do you spell that?
Piecyk. He's one of the top Apple analysts. Gene Munster, of course, another great one. I usually go to them for my information when it comes to Apple events and how the stock handles it. But usually you see a run up as you go into it. And then speaking of run ups, this is the slowest week down here. I mean, this is, we have a 3-day weekend, but it might as well be a 5-day weekend. Thursday, Friday, people are going to be running for the hills. Then you got everyone going back to school. So you have people with kids taking off.
College. Yep. Good point.
Yeah. And then there's we have the jobs number Thursday. That's the one that, we as horrible as this sounds. And this is where, you come on a show like this and you say, well, you want to see the jobs number, come in poorly. Well, that's a horrible thing to say, but we need to see that the Fed action is actually slowing down the economy on that front as well. And if we see a negative reading in the jobs number compared to what they expect, we could see another little leg higher here Thursday, Friday.
All right, I think I know where you're going with this one, but you say the leadership is all wrong. Explain what you mean by that.
Well, anyone like Mitch studying for a CMT down there, you always want to study the history of markets and the leadership that you get in strong, bull markets. And that leadership never happens to be staples and utilities. And I'm talking about the utility sector. Punch up the XLU on a 10-year weekly chart, by the way. There used to be a site called channelingstocks.com, I believe. This thing,
we
talk about that.
Do you? I
buy
don't
low,
know.
sell high. The same stock again. How'd you retire so early?
Okay, well, go to look at this. All right, we're kind of at the upper end of a beautiful 10-year channel, and when it gets out, but it just made a new high. If you break down the index, there are 15 stocks in the utility index. 13 of the 15 are above the 200-day moving average. 2 of them, FE and American Water, that fine Camden, New Jersey company, were above the 200-day last week, just fell below. So there is strength across the board in this sector. This is a sector that you buy when you're playing defense, when you want to have a steady dividend, a company that everyone uses, that's going to be stable in a rocky environment. And when this leads, it gives me pause. And then the other thing that's coming back is energy. ExxonMobil, Chevron, they're going to challenge new highs. It wouldn't shock me to see them make them. And then Occidental, my God, Mr. Buffett just loving life.
Oh, he's crushing it.
Yeah, it's already up over 110% for the year, and it's still making new highs. You can't slow it down, but just look at crude oil. We're starting to take another leg up, and we talk about inflationary fears. And Mitch had a tweet yesterday. Mitch, I do follow you on Twitter. I saw this. talking about, well, what if we haven't reached peak inflation? Well, if we have another spike at the pump, especially coming into the winter season, and then you got, home heating, that could cause another spike up in the CPI. And
what about the
who knows?
recession? I mean, what about the impending recession and slowdown? Who's going to need oil? Who's going to drive anywhere? Who's going to go to work? Who's going to buy anything? What about the demand? And if you're believing,
the problem is, Joel, it's like heads the bears win, tails the bears win here, because
that's what I see. Yeah,
because like if you got no, if we're the Fed's trying to kill demand, well, killing demand kills stocks. I mean, I don't see how it adds up. And that's why, and I think Jay's kind of on the same page here. I mean, I agree with the utilities leadership here too. This market's been playing defense for a long time. It's been some of these defensive issues that have held this market up. But yeah, I don't know if that can continue. Yeah,
well, the one positive though is Apple. I mean, let's see it, and let's watch Microsoft. It's fading from its 200-day, but it's still in a relatively recent uptrend, although I'm a little concerned. So we're starting to see signs of that bottom, but it probably will be retested. I hope not. I want to be wrong. I want to see new highs by the end of the year. Of course, I'll miss the rally, but but for everybody who's got that 401k and has been saving over the long term, we'll see. And then you mentioned recession, which is the other big topic besides bear market rally down here. And then define, how you feel. It feels like a recession. I've lived through these. This is what a recession feels like. I know the jobs number is skewing everything, and the National Bureau of Economic Research is not officially declaring it that. But when they do, that's probably when you got to jump into this market with both feet, because usually by the time they declare it, you're already halfway through it, if not 3/4 of the way through it. And that leg and that dip may need to be bought. And to one of your points earlier, Dennis, before I jumped on, I heard you talking about a buy the dip mentality. I think we're starting to see that come back. That's the feel I'm getting down here. And going into year end, we'll see. But you get some meme stocks back in play. There are people ready to jump into this market and get involved. They're just looking for the right time. And these recent dips, have seemed like they've been bought, and it could be the right time.
Jay Woods, Chief Market Strategist at DriveWealth, New York Executive Floor Governor, the man with the best background maybe in the history of the Pre-Market Prep Show. Jay, great information. We'll get you back on again soon. Thank you, and have a great one.
You too, guys.
Thanks, Jay.
All right, Triple.
You don't like my background?
Not as good. Let's just say
I'm
not
in the
as
new
good.
house. Look, I got the banner up there. I got the white wall. I can see the.
Is
plug.
that a bullish call for home constructions that Dennis is finally
you get
done?
white walls. They spent 1.5 years to get white walls. There you go.
That's a special white walls, though. They probably took like an extra 3 weeks to get them like that.
Oh yeah, they painted that thing like 5 times. That's as white as you can get.
Didn't take Best Buy long to fill that gap, folks. The sellers came in here, and we're already back within yesterday's range. So I'm sure the S&Ps had a little bit to do with that. But back in, so much for that that gap play, that gap fill. That's already happened in Best Buy.
Let's do some ticker time. Can we?
Let's do ticker time, and then
5 minutes of ticker time here.
You guys throw up some tickers as we just take a look really quickly at URA, and then we'll grab some tickers from you guys.
Yeah, so you've just run here on uranium. I've missed this last move in uranium. I caught it earlier in the year, but I've totally missed this one. CCJ, the Canadian company, has been always my choice, and this thing has just ripped, roaring higher. Shout out to Tim Seymour. He's had a good position in that. He comes on the show every once in a while. Love you, Tim. 22 to 29. Congratulations. It's been a fantastic move. Too far for me to chase here now.
Anything? What's the ETF, Mitch? For
URA.
That's what I mentioned.
Yeah, but I took it to CCJ because
URA.
I tried to stay in the ETF.
no, it's easier because it's you get more of a broad look here. Oh boy, trading up again. We mentioned this. We talked about this on the at the close show, and you have a point here of make or break here, and that's just above $24. So that would be my target, 24 to 24.25. Currently trading 23.69. You establish a bid, a sustained 2-3 closes over 24. I'm looking for another leg higher, but got to respect resistance until it's broken and closed above.
All right, let's go to the chat now. Tickers here. First one up, we have Cleveland Cliff. Of course, remember that
I like
they
that one.
did get a push last week with their mention of $75 a ton for steel, and that's for U.S. It did push a lot of the steel stocks last week. How do you feel about the chart?
It's got to get over 20, and this
Yeah.
got rejected right at the level you don't want to get rejected to if you're a bull. I mean, 20 was support back in May. Obviously, took it out in June, and then you come up here to August and you get rejected, and now again the double top here at 20. So resistance is very well defined. I would say I can't get bullish this stock until it's over 20, and I'd be a seller unless it's over 20.
4-star, Dennis.
I give it 4 stars,
Okay,
maybe even 5.
Yeah,
I like
we'll
this.
go.
Joel's
Yep,
going to start doing the stars.
I
So I
got
was starting to tell a story where we wanted to do ticker time, but when I started up rate trading in 1999, Joel was my office manager, how I met Joel. And every single morning, he put all the stars for the S&P. So he'd have all the S&P futures and he'd have all the levels from support and resistance. He'd hand out a sheet of paper. He printed it out, hand out to every trader in the office.
Hard
We
worker.
had like 18 traders in there. So he'd hand them all out and boom. And that's
and
where
yell
the
them
star
out.
system was.
That was fun. That's when we used to, hey, you're coming up on a 3-star, 500 and even Goldman, and we'd be like, sell.
The traders
little
helped each
bit
other out
different.
for
No
sure.
squawk now, but
Joel
Yep.
made his own trading floor when he got taken off. He was
Oh,
like, you
man,
know
that
what?
was-
I'll make my own trading floor.
that was what was the peak there? 25 guys, maybe 20.
I think what's what we held with that we had enough seats for 25. I don't know if we ever got full, but we were like 21 or 22. Probably. And then what happened was the internet just got better and everybody started doing it from home. And we still had those traders, but they weren't coming to the office. They were doing it from home. And everybody slowly moved going it from home until eventually, we closed the office, I think in 2011 or 2012, I think it was. It was open for a long time.
You know what?
but-
We were at work at home before work at home, and then
for
also like doing
Yeah.
remember how we used to drive Adam Pratt crazy trying to do the show? Like you were in Canada, and I was in back in the Bright office in Southfield, and like, well, how many different platforms to go through to connect and all the different things, and now the rest of the world is just catching up with us.
Now you just show up, right, Joel?
That just- yeah, now it's just-
Mitch handles
We
everything
lead.
else.
All right, let's go a couple more
Charge
stocks.
point.
Let's say
Let's go.
57.
Charge
Let's get
point.
a hard stock in here, not an easy one. I want a hard
Charge point earnings after the bell.
Well, that's a hard one because it's got earnings after the bell, and that's always a wild card here. It's up ahead of it. Again, I like to own stocks ahead of the reports. I did have this one last night, and then it started getting bid up hard last night, so I ended up selling it. Obviously, continuation here today. It's, that we talked about this in, some of our educational events too. There's a positive bias going into a report that I try to extract that alpha from that positive bias going into a report, but then I like to sell them before they report. So technicals take a backseat once you get the fundamental news, but 16 major resistance.
Wow, dude, you are
We'll let Joel do the next one. I took that
16,
whole
no,
one.
14 support. 14
14 to
support for
16.
now.
14 to 16.
I love the hourly
Trade the
chart on
range,
charge
.com.
point. Hourly chart has a nice trend line, nice pattern there. We'll see if it breaks above.
What's the next ticker?
All right, let's go to Plug Power.
Oh, I love the story here. And you've got to respect that this stock, has been around for so long. It's had these, rallies, and then they get faded, and then it has these rallies, and then they get faded. It's trying to come back here again. Plug keeps coming back. The ones I pair it with are Ballard and Fuel Cell. Full disclosure, I do have a small position in Fuel Cell right now. But Plug, I kind of like the pullback. It had the deal and talks, they just got to figure it out. So I have hope for this stock, but again, it's up so much, I can't chase it here.
2 lower highs. Oh man, are you at yesterday's high yet here? No. First things first. 2 lower step down seller in here after it got into the 30 handle, and looks like it may be present today as well. So I think I think the high could be less than 29.57 today. If not, next daily high 30.24. Still hasn't filled the gap from last week, and I'd like it lower 26.20, 26.30.
All right,
Last
let's do Ulta. Ulta has been hanging out at the top. Let's see how the move's been doing here.
And we talked about this one last week.
Oh.
One of the best run companies out there. I mean,
Wow.
and unbelievable that this is right near all-time highs, considering the market, the carnage that
Woo,
we've had in
woo,
2022.
woo.
For this to be up on the year is just nothing short
Forget
of
consumer
impressive.
demand. That
Because it's
Ulta.
not cheap. It's not a cheap stock either. Obviously, probably benefited, early in the year from the reopening economy, I think, to a certain extent. But, well-run company. What's not to like when the thing's, right near all-time highs here too. So I'd say, the strong get stronger, still the weak get weaker. The only thing is it is near all-time highs. If you're looking for things to take profits on, that's what happens. So I think they reported last week, didn't they?
Yes, they did. That was that pop
and
that
then
you
the
can
rally
see.
got faded. So it's tough, but I like the company. I just don't know if I like the stock price.
Yeah, way up here. I mean, this was boom, a warning shot here on Friday, recovered on Monday. So I'm just looking, it's basically 30 point rally from 404, 50% takes you 419. The high close of this rebound here is 419 and a quarter. You're above it now. You close above it. Yeah, let's take a shot, but it's going to fill in here. 33.88 the high on Friday, 23.67 your high yesterday. So it's going to fill in there, but important to close above 419 and a quarter. It's 901 here.
Turnaround
so,
Tuesday has turned into leaky Tuesday.
Tanking
here.
Tuesday.
It turned around. What are you talking about?
It's helped me out because I came in short. I should have been playing the turnaround Tuesday, and it's come back in. And I was like, holy, you may salvage this day here yet. I was already writing the day off because I got biased to the short side. Don't bias yourself. Trade market neutral, stay market neutral. I was like, I was a little bit short. Nope. This is turnaround Tuesday. Hurt me this morning, but coming back.
All right, that's going to do it for us today. You guys can definitely go check out some tickers with Joel Elconin on PreMarket Prep Plus. Dennis Dick, like always, is going to stay at it, do what he does best, and get into the trading chair. Joel, anything else before you get on out of here?
No, I mean, it's right now I've lowered my bar from 59.50. That was to get green on the week, and now I've lowered those expectations here. I'd like to see us just hold 40.50. That's mid-range on the session, and then work your way up. It kind of feels like that pre-market high is going to be your Globex high for the day too, whether or not we can pierce that pre-market low. Not an inside day because we made that higher high, but could have an inside day based on the intraday activity. So feeling better today, back in the groove, and I'll be even better tomorrow. So everyone have a good one.
All right, Joe, we'll get you on out of here. Have a great one. And Dennis, have a good one also. Enjoy the new house. Enjoy the new house with the beautiful view. I got to see that. So we got to have Dennis show off a little bit of that house. It's looking nice there. So shout out to Dennis. Did want to go ahead and do one last news before we wrap up today. I know that everyone was calling it out in the chat. So Lucid Group here raising up to $8 billion in primary capital via one of the or more offerings over 3 years under a mixed shelf offering. So if you're seeing why Lucid's down, it's on this offering, and we'll continue to watch. You guys know exactly how I feel about Lucid. We'll see what happens. Will it keep coming down? I've been calling a $10 stock on Lucid for a while now. We'll see if it gets down there, and let's take a look. All right, guys, that's going to do it for us today on PreMarket Prep Plus, PreMarket Prep. Definitely catch us a little bit later, like always, on At the Close. If you guys don't watch At the Close, that's where I go through the intraday's actions with Joel Elconin. This is every day at 3:30 p.m. Eastern. I feel like you guys out there are missing out, not catching that show. Sometimes Joe has some really good levels that he calls out on that show for you guys to keep an eye out. And then, of course, come in the next day and see how that's moving. That's why I love At the Close, because a lot of times we catch things and then the very next morning, it's kind of doing what we were looking for. So this is why I think it's so important. I want to see you guys on At the Close today. That's at 3:30 Eastern. Now coming on is live trading action with Lord Ryan, Zunaid, and I. Let's go see if we can do a little YOLO action, see what Zunaid is bouncing back in the options game. I'll be looking to bounce back in the equity game. Lost a little bit yesterday. Going to bounce back today. Let's go ahead and get after this market and see what we get today.